Good morning and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Pesa. So today we'll be talking about the top market events that are expected to be moving the markets today. We'll also be talking about Nvidia earnings that were released yesterday or last night just after the market close. We'll be looking at the market reaction, and once we cover that, then we'll dive straight into charts, do some technical analysis, try to understand where the markets are moving, how they are moving. And once we cover that, hopefully everyone will trade from an informed perspective. So once you join in, kindly say hi in the live comment section, and these will confirm that everything is working just fine. So as usual, I would like to begin with a disclaimer that this session is not investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So let's get started with the economic calendar and then try to understand what are the top events. Then after that, we move on to the next session. All right. From the economic calendar today, we can see quite a number of events currently going on. So yesterday, we had quite a number of events. We didn't have any major events besides the Nvidia earnings. So only the CPI from Australia, which is a measure of inflation year over year, showed a slight decrease to 3.5%, down from the previous reading of 3.8%. The rest was low impact news. Then today, we have quite a number of things coming up. Of course, we don't know the exact time when the German preliminary CPI data will be coming out. But then we have a specific time for the Canadian current account data, which is a difference between exports and imports. In the previous report, there was a net deficit of negative 5.4 billion. And now we're looking at the deficit widening to negative 6.0 billion. So if the deficit widens, it's expected to be worse for the Canadian dollar. If it improves from the previous reading, then that should be positive for the Canadian dollar. So the main events for today would be the preliminary GDP quarter over quarter from the US. So in the previous reading, we had 2.8%. And of course, we don't expect much of a change. So we expect the same number of 2.8%. However, if there's a major difference, then that could cause an impact in the markets. Of course, we know that a strong GDP is positive for the dollar, whereas a weak GDP is negative for the dollar. So we'll also be focusing on the unemployment claims. These are the people who are filing for unemployment insurance for the first time. So in the previous reading, we had 232K, and we are not expecting much of a change. So if you look at the previous reading, then you'd notice that we have had this cycle where unemployment claims were reducing. We had a record low around January this year. Then since then, the overall average has been a bullish trend. So if we continue seeing a rise or an increase in unemployment claims, that means that the job market is worsening, and the Fed may have to react to that, basically by hiking interest rates. So this recent increase from the January all the way to the current level shows a gradual increase in unemployment claims, which implies that there's more and more people who are claiming for unemployment insurance because they can't find jobs. And as a result of that, causing the unemployment rate to rise. And as a result, we are seeing the Fed looking forward to respond to that. So looking at the CME Fed Watch tool and the expectations for interest rates, then there's quite a number of things that we are expecting for the next Fed meeting, which will be happening 20 days from now. It should be on the 18th of September. So on one, the chances of the Fed going for a 25 basis point cut are only reducing. Last week we were looking at 74%. This week we are looking at 65.5%. but they're not reducing in the usual way. In this case, it's only because the chances of a 50 basis point cut are increasing, and now we are looking at 34.5%, up from 20s. We saw 22, 23% last week. Now we are looking at 34.5%, meaning that the markets are increasingly betting on a higher rate cut on the September meeting. So this expectation is driving the dollar index lower and driving other currencies higher against the dollar. And at the same time, we're also seeing the stock market seemingly looking like it's going into a correction territory. So from Nvidia earnings, we had quite stellar performance. So Nvidia reported earnings after the bell that beat Wall Street expectations and provided stronger than expected guidance for the current quarter. So Nvidia shares fell 8% in extended trading. So here is how the company did versus LSEG consensus expectations. So one, earnings per share was 68 cents compared to the expectation of 64 cents. So this was an earnings beat. On the revenue side, the company made 30.04 billion in sales compared to the previous compared to the expectation of 28.7 billion. So Nvidia said it expects about 32.5 billion in current quarter revenue versus the expectation of 31.7. So even the earnings projections were adjusted higher, which basically underlines the stellar performance of the company year to date. So revenue continues to surge at the chip maker, rising 122% on annual basis during the quarter, following 3 straight periods of year-on-year growth in excess of 200%. So net income more than doubled to 16.6 billion, or 67 cents per share in the quarter, from 6.18 billion or 25 cents per share in the year-ago period. So Nvidia has been the primary beneficiary of the ongoing artificial intelligence boom. Nvidia shares are up more than 150% this year, after soaring almost 240% in 2023. Its market cap recently eclipsed $3 trillion, and Nvidia was briefly the most valuable public company in the world, though it's now second to Apple. So revenue in Nvidia's data center business, which includes AI processors, climbed 154% from a year earlier to 26.3 billion, accounting for 88% of total sales. It also topped street account expectations of 25.24 billion. Not all of those sales are AI chips. Nvidia said Wednesday that $3.7 billion in revenue came from the company's networking products. So they're basically expanding their revenue segments. So it's not just selling AI chips or data center revenue. We are also seeing more income coming in from networking products, in this case, 3.7 billion. Much of its business is targeted at a handful of cloud service providers and consumer internet companies, including Microsoft, Alphabet, Meta, and Tesla. Nvidia's chips, such as the H100 and H200, are used in the vast majority of generative AI applications, such as OpenAI's ChatGPT. So many customers are waiting for Nvidia's next generation AI chip called Blackwell. So Nvidia said it shipped samples of Blackwell chips during the quarter and made a change to the product to make it more efficient to manufacture. So in the fourth quarter, we expect to ship several $billion in Blackwell revenue. Nvidia Chief Financial Officer Colette Kress said on a call with analysts. So the change to the mask is complete. There were no functional changes necessary, and this came from Nvidia CEO Jensen Huang. So clearly, we know that Nvidia is one company that has been beating earnings every quarter. And as a result of that, there were significant expectations that Nvidia would continue outperforming. And that meant that investors had already made good bets on Nvidia beating earnings. So as a result, we saw what we call front running, people buying before the earnings were already announced. And when the earnings were being announced, we saw the exact opposite reaction. So despite Nvidia beating both earnings, revenue, and projections, what we saw as the market reaction was a big drop in the Nvidia shares. So if you look at the aftermarket and during the market trading, we saw overall weakness or underperformance in Nvidia shares. So yesterday, as at the market close, Nvidia shares were down 2.1%. And then immediately after the announcement of the earnings, the stock dropped about 8% before recovering and ending the pre-market session down 4.44%. So we will be looking at more price action later today. Of course, after people get the news and seeing the discounted prices in Nvidia shares, there's a good chance we will be seeing some form of recovery as at the market open today. So for now, we expect the market to open with a gap downwards of 4.39%. So despite the market closing at $125.61 last evening, the opening price is expected to be somewhere around $120.07 per share. So looking forward at the highlights for the day, I don't know what will be the key highlight. Let's look at trading economics. So far this morning, Spain inflation drops more than expected. So Spain's annual inflation rate dropped to 2.2% in August. And this was the lowest since June 2023 and below expectations of 2.4%, primarily due to lower fuel prices. The core rate also eased to 2.7%, its lowest since January 2022. So clearly, we are seeing more European countries winning against inflation, and this basically means that it prepares the way for the European Central Bank to continue cutting interest rates. So the euro dips as low inflation boosts odds of ECB rate cut. So the euro continues weakening. So when we see more chances of the eurozone winning against the inflation, then that prepares a way for the ECB to cut interest rates, which weakens the euro. So European stocks rise amidst key economic data. So in this case, we are seeing a rally in European stocks with the expectation of the ECB cutting interest rates, creating an environment for easy money. And as a result, we are seeing European stocks making a recovery. So EU car registrations edge high in July. Japan consumer morale stays at 3-month high. And in this case, we are talking about the consumer confidence index in Japan, which stood at 36.7 in August 2024 and changed from the previous month and below market forecast of 36.9. So oil edges higher on ongoing supply risks. We know that WTI crude oil futures edged higher to around $74.7 per barrel on Thursday, following 2 consecutive declines as concerns over tight supply slightly increase. So also Australia private capex unexpectedly drops in Q2, and those are the major highlights for business or market news today. So that being said, I think it's reasonable for us to now shift into some charts, try to understand what's happening before we progress on to the next part of the presentation. So from the comment section, I can see Joseph Gisharu in the house. Good morning. Thomas Mashuma. Hello. Wangari Patrick. Good morning. Hi Rufus. Why is the euro too weak out of nowhere? I think we have already mentioned that. So the fact that we are seeing inflation dropping, especially in Spain, is leading to that expectation that the ECB might continue cutting interest rates because they are winning against inflation. So we'll be looking forward to the German inflation rate, which is the biggest economy in the Eurozone. So if it happens to be weakening further and getting towards the 2% target, then that should lead to further weakening in the euro currency. So let's move on to some analysis. And in this case, we go through some charts together, understand what's currently happening. And once we cover that, hopefully everyone will trade from an informed perspective. So let's start with the dollar index as usual. Clearly, Monday was some good day with the dollar index making some good recovery. Tuesday, the dollar index went back downwards. Yesterday was a story of the dollar index continuing to recover. And today, as of this moment or as of this hour, we have seen a major jump in the dollar index, indicating the strengthening of the dollar, which might have some major impacts on other currencies. So remember, if the euro is weakening, if the euro has the biggest weight in the dollar index, so you will tend to notice that in that case, the dollar index tends to strengthen more when the euro is weak. So looking at Euro USD, you can see the big move happening here after the Spanish inflation data. So as we had discussed here on Tuesday, to watch this area here for a breakout, the market happened to bounce off the trend line, didn't quite get to a new high. So as a result, we saw the market extending the weakness and eventually breaking the lower trend line. So after breaking the lower trend line, there was an overall sell-off yesterday. So today in the morning, an attempt to recover, followed by a big break. So our target was eventually hit at 1.11, and it seems like the market is pushing further downwards. So in this case, it shows that there is more potential for the market to keep moving downwards. And we could be seeing the market extending this sell-off to last week's low. So last week's market open was around 1.10297. So there's still more room for downside momentum. So if the dollar continues with the current strength, then we should be expecting to see some further downside momentum, extending all the way down to 1.10297. So for pound USD, we're also seeing the same story playing out. So we had projected that the market would eventually pull back downwards to around 1.31438. So from what we are seeing here, if you go to the daily chart, and then you zoom out, you'll notice that this was a previous high, the horizontal trend line that we have at 1.31438. So after yesterday, the market completely changing direction. And if you look at the forward chart, you can notice the market attempting to go up and failing. Now it seems more likely like the pound should be able to retest the previous low. So this was yesterday's low. So we could be seeing the market going straight forward and testing yesterday's low and potentially extending the sell-off to the previous high, which might now be turned into a support. So 1.31674 is the immediate target with an potential extension to 1.31438. So pound yen still remains within the same setup. So we had analyzed and expected the market to drop here on Tuesday. So didn't quite complete the journey, but kept pushing down, and now we might be seeing the market completing the journey. So in this case, we are seeing a big sell-off in the pound, and we could be seeing the market retesting the lower trend line here. So for the Australian dollar against the US dollar, what we are seeing is a market that is just moving off high that we saw yesterday. So with the current strengthening of the dollar, we should be expecting to see some form of pullback, potentially extending all the way down to yesterday's lows. But also, you have to be aware of this area here, which was high. I think this one was on Friday last week. So once the market breaks this area here, then the potential for going for yesterday's low might be playing out. So USDN is still struggling around this area here. So we projected that the market would find resistance and drop all the way down. So we got close, but not the exact target. Then the market bounced yesterday, and now the market is still struggling around that area. So for USD JPY traders, I would be more concerned about the lack of volatility in the currency pair right now. Because from what I'm seeing here, it doesn't seem at all likely that the market is forming any major progress. To me, it seems like a market that is just consolidating. So I'll try and show you what's happening here. So since Tuesday, today being Thursday, this is the overall price action that we are seeing here. So more of a sideways momentum. and the overall price action seems to be following this direction here. So unless we have a breakout, I would chill out of this one, just patiently waiting for the eventual breakout. So that is it. Trying to use a trend line here, sorry. So we don't have much happening in USD JPY. Unless something breaks here, I expect the market to remain within that triangle. So the Nikkei 225 index has completely formalized the new channel downwards. So now we are looking at the market that is following these two trend lines. I remember we analyzed this some time back. This was on Tuesday. We expected a drop towards the lower trend line. The market retested here a second time and now a third time. And we are seeing a strong rejection of that upper trend line. So perhaps some further downside momentum from here. So as for gold, we are seeing the market really struggling to break into a new all-time high. So the all-time high on gold is 25.31, just here, which we saw about a week ago. So the market pulled back downwards and then rallied again, down and then up, down and then up. And now we are seeing a peculiar trend line forming here. So it seems like the market is finding support along this line here. So if I was to skip this low here and use this other one, then the overall trend line seems to be consistent along this area here. So on the other hand, if we remove the horizontal lines, and you look at the highs we have seen in the recent market activity, then you'd notice that from this high here, all we have been seeing is the market forming a falling trend line here. So right now, the market was just bumping from the lower trend line as far as the day evening, making a strong rally towards the upper side. But then if you use the 4-hour chart and you really look at the chart and the daily chart, then there's more sustained push to form a new all-time high. So I remain pretty bullish on gold. Looking at the last 2 days, they were quite bullish, especially on Tuesday. So Wednesday is a story of a market. That's weekly, sorry. So from daily, you can see we are seeing 3 days up, 1 day down, 1 day up, and so on. So from the daily time frame perspective, it's a mixed reaction. From the 4-hour chart, it's the same thing, the same triangle. From the 1-hour chart, this is how it looks like. From the 15-minute chart, this is what we are seeing. So it's more of a market that is attempting to make a very strong rally, but finding resistance towards the upper trend line. And we could be seeing something similar happening here. So in this case, the current cycle is the market moving towards the upper trend line. And once we get to the upper trend line, then we test that area here to see if the market eventually breaks or responds by moving back downwards. So the idea is that the market gets to that area and then goes back towards the upper trend line. But also, we have to consider the possibility of the market eventually breaking towards the upper side and rushing towards a new all-time high. So we will be observing the price action around this area to see if we can identify a nice setup. So Brent oil made a very strong rally, didn't quite complete our pattern as we had expected. So we expected to see a complete W-shaped pattern. The market didn't complete the journey, and now we are seeing a big sell-off, meaning that the market was unable to form an equal high or even a higher high. And now we are seeing the market pushing back downwards, which implies that the current cycle is no longer the market going up, but in this case, the market going back downwards. So in this case, the expectation is that the market heads for $75.246 per barrel. So we discussed this earlier in the week. This was on Tuesday. I remember drawing this flag here and mentioning that the two identified areas will determine our trading idea. In this case, the breakout eventually happened towards the lower side, indicating that we go for a short selling position. And since then, the market has only been accelerating downwards. So today, I expect an extension of the big sell-off as we approach the low that we saw 2 weeks ago. So US equity indices have had quite a rough recovery. So after the recent sell-off that happened last month and the beginning of this month, the market made a significant recovery before having a sell-off. So from the forward chart, this is what we have been seeing. The market making a very strong rally over the week, and then a sudden drop, strong rally, a sudden drop, strong rally, then a sudden drop. So it's almost looking like a ladder or something, where the market, if I may, shows us a very strong bullish momentum and then breaks and forms a big sell-off. So after the big sell-off, you see the same thing happening again. Market sustains a bullish momentum, then another bearish sell-off. So after that, we see yet another one, the market forming some bullish momentum, then a very strong bearish sell-off. So this remains the prevailing pattern in the Nasdaq 100 index. And now we are seeing yet another form of recovery, the market pushing for some bullish momentum here. So I would be within the expectation that once we get to the New York session, then perhaps we could be seeing something similar. So the only difference is last night we had the Nvidia earnings, which turned out to be extremely positive, but then the market had a big sell-off. This happened close to midnight. So the sell-off started from around here, dropped all the way down. Market opened with a gap even lower. So in this case, right from the reporting of the Nvidia earnings to early morning trading, we had 1.58% drop, and the market is almost recovering 100%. So in this case, I would be on the lookout for the market going for another big sell-off. So in this case, it would make more sense to wait and see if there's a sell-off that breaks towards the lower side around this area, especially during the New York Open. So the Dow Jones is very close to a new all-time high. So remember, we had a new all-time high on Monday, Tuesday, a sell-off, then Wednesday, a further sell-off, followed by recovery. Today, we are seeing a continued recovery of the same. So the previous initial idea of a head and shoulder pattern is no longer tenable. So now we have new data, basically indicating that the market is making a very strong attempt to go for a new all-time high, especially after the strong 4-hour candlestick indicated rejection of lower prices here. So clearly a market that is making a very impressive recovery. So the potential for the Dow Jones going for a new all-time high is very real. So the previous all-time high was here. So expect the bullish momentum to continue for the day. So SP 500 are behaving the same way as the Nasdaq. So a rally followed by a drop, a rally followed by a drop, a rally followed by a drop. And now, yes, we have another rally continuing right now. So now looking at the Russell 2000 index, we are seeing quite a strong momentum upwards in what looks like a change in the prevailing trend. So in this case, the prevailing trend was following this path. You can see there was already a breach towards the upper side. And in this case, the prevailing trend line on the lower side was following this path. So clearly attempts to move prices back downwards are missing. Sorry for that. So here, what we are seeing is a market that attempted to break towards the upper side, failed, and it's now attempting to move towards the lower side. So from the forward chart, this is how it looks like. So we had the big flagpole, and now we have a very extended flag that is almost recovering 100%. So the initial beginning of the move was around here. So in this case, we are seeing an overall recovery in the Russell 2000 index. So with the value areas somewhere being along the lower trend line. So if the market was to retest this trend line again, then that would be an ideal area to be looking for a bullish position. So if you happen to see the market playing out along this area here, then looking for a bullish position might be a better entry. So As for Bitcoin, we had projected that the market would continue dropping. So eventually got towards the lower trend line. And since then, it seems like the market is finding some good support. So we could be seeing some recovery playing out from the current price action level. With, in this case, the previous trend line becoming a nice target. So the previous trend line was following this path before we had a breakout towards the upper side. So in this case, we could be seeing some slight bullish activity with the market moving higher and possibly testing this area here. And this is a price action level of around 60,458. So USD trading against the Swiss franc, dollar had continued weakening, but now we are seeing the dollar jumping higher. So if you break above this area, which was previous support, then the potential move might direct us to this other level of around 0.85594. So New Zealand USD, New Zealand, remember, was New Zealand dollar was the strongest currency in the market for the last couple of weeks. So from the 4 hours and 1 hour chart, you can see that there was a new high. And from the daily chart, the last time we had seen such a high price action level was all the way back on the 12th of January this year. So now that the dollar is regaining some strength, we are seeing some reversal here. So in this case, the previous high was 0.62535. So there is that potential that the market eventually drops back to this area. So a very short-term trade where the New Zealand dollar could continue strengthening. So for the UK 100 index, from the daily time frame, I think we saw this happening, a market rejecting higher areas, but then eventually after rejecting, it keeps on pushing higher. So from the daily time frame, this is how it looks like. So we had this pin bar here, the rejection of higher prices. Market attempted to go down, didn't hold for long, and today it's pushing higher, meaning that it's likely it could be breaking the upper trend line. So from the 4 hour chart, this is how it looks like. From the 1 hour chart, this is how it's looking like, which basically implies that for the last 3 days, this has been the sequence of highs, and this has been the sequence of lows, and the market is about to either break or bounce from that area. So using a smaller time frame, in this case the 15 minutes chart, then what I'm basically trying to say is that once you remove all this noise, then the idea is to track the price action around here. If there's a strong rejection, then we see the FTSE 100 index going back downwards. But then if there's a clean break, then we go for the top of the pattern, which is all the way up. So in this case, the market breaching this area means that we go higher towards 84.02. So that's it for the day. Thank you very much, guys. Let me check out the comments section. So there's a request for USD JPY analysis. I already did that. So Nvidia's exceeded expectations as expected. Analysts in Bloomberg Fox expected the report to cause shockwaves in the market, but that hasn't been the case. The bullish move in Nasdaq has been sluggish to why. So we are looking at a market where Nvidia has been an almost perfect company. So if you're expecting these particular projections in earnings as well as revenue, it keeps on beating those numbers. So the real risk is Nvidia missing earnings, not Nvidia outperforming the market. So there seems to be a lot of future earnings in Nvidia that has already been priced in, with the company gaining about 1.8 trillion in market valuation this year. So that means that a lot of investors are very positive of Nvidia performing really well, and they have been buying the dips. So every time you see a dip in Nvidia, they have been accumulating a lot more. And as a result, they tend to sell at cycle tops, especially when Nvidia announces positive earnings. Because they had already bought earlier, they tend to react the opposite direction. So when the earnings are actually announced, we see the investors selling, leading to a big sell-off. However, every time there's a big sell-off in Nvidia, we see the stock market recovering pretty quickly. So after the big sell-off that happened yesterday, we could be seeing the market responding today with buying the stock at a cheap, and we see the Nasdaq also recovering. So yes, the Nasdaq has been sluggish because a lot of investors have been selling the cycle tops. So remember, all these stock market indices in the US are very close to all-time highs. So for instance, if you look at the daily chart and you look at the current price action versus the all-time high, then you can notice that it's very close. So just about a week ago, we were about 4% below the all-time high. This is 4.21%. So right now, if you check, the market is just what? This is 7.39% away from the all-time high. So we have just recovered from a big dip, and the market is continuing to push higher. So I would say this was only temporary, and now we are seeing the market coming back quite strongly. So in this case, if I was to use this as my trend line to mark the support, and this as my trend line to mark the resistance, then what we are seeing here is a very strong and impactful recovery. So the bullish momentum is expected to continue, perhaps even retesting these previous lows, which lies squarely around this area here. So some further bullish momentum is expected in the Nasdaq as the stock market recovers after the sell-off, despite positive or better than expected Nvidia earnings. So as always, I appreciate when you guys like and share or retweet the live. Also, if you're watching this on YouTube, remember to like and subscribe to the channel. So a good question from Nonizi Jack. I would like to understand the Fed cut rates. What exactly are they trying to achieve, and how that decision usually affects gold? So the thing is, when you think about gold, think of it as a metal that has been used as a store of value for decades and decades, and it hasn't lost value over time. However, currencies tend to lose value over time as a result of the central banks printing even more currency. So when you think about gold that way, then you compare with currencies. If you have the option to hold cash over gold, then that cash better hold value. So the most popular cash in the world is the US dollar, the world reserve asset, or the world reserve currency. And when companies and institutions are holding a lot of cash, they don't just put it under the mattress or in their bankers. They basically put that cash in US treasuries to get a yield at the end of the year. So the yields on the cash that they deposit with the US treasuries are basically determined by the rate of interest rates. So if the rate of interest rates is really low, let's say close to zero, then the yields are also really low, close to zero, and they don't get much reward. So over the last 2 years, we have seen the US holding rates higher and keep continuing to hike. Sorry for that. And they got to an upper limit of 2.50%. And this meant that the yields, 5.50%. And this meant that the yields on US treasuries were ranging between 4 and around 5%, giving investors some pretty good return. So as a result, we continued seeing more investments into US treasuries, leading to a scarcity of the dollar and a strengthening of the dollar. So when the Fed reverses the policy and starts cutting interest rates, the yields go down and bonds become unattractive. And as a result, you see more investors buying gold in order to hold value. So in this case, a cut in US interest rates discourages investors from putting their money in in bonds or treasuries, and encourages them to put money in bonds. So as a result, that's why we are seeing that happening. So in this case, we're expecting to see a continuation of the bullish momentum in gold if the Fed goes for bigger than expected rate cuts. So the 25 basis point rate cut is already priced in. So we are looking for a potential 50 basis point rate cut. So a good one, the weak pound, was it as a result of the Spanish CPI? I don't think so. I think it's just the strengthening of the dollar. So remember, it's pound USD, it's not just pound. So from what we are seeing with the dollar index, whenever there's a big jump in the dollar index upwards, you'll notice that the pound will be reacting in the opposite direction. So in this case, as the dollar jumps higher, the pound jumps weaker. Just to give it comparison, if you look at the big candlestick here, where the pound gained against the US dollar, then you go back to the dollar index, then you notice that it was as a result of the dollar index weakening. So a big jump downwards for the dollar index meant the pound gaining against the dollar, and now we're experiencing the exact opposite. So the dollar index has strengthened. Was it due to Nvidia report? No. The dollar index, as I always say, is a index that measures the strength of the dollar against a basket of 6 other currencies. These currencies are not weighed equally. They have different weights, and the euro has the strongest weight. So what we saw earlier this morning is Spain reporting lower than expected inflation, and as a result, fueling bets that the ECB will be cutting rates more. So as a result, we saw a weakening euro, which led to a strengthening of the dollar index. So the main reason we are seeing the dollar index jumping higher is because the euro is weaker. A good question from Felix Ojuan. Why don't you have a group on WhatsApp for analysis? I tend to view WhatsApp as a highly invasive, so I prefer using Telegram. You should find that on my personal group. The link is available on my Twitter bio. That is Attendees Club. So that's it for the day. Thank you very much, guys. Remember to check out the newest episode of the Bullish Banter podcast. Check out the newest episode of the Financially Incorrect podcast. And if you'd like to register for an account, check the links in the description below. And if you're watching this on X, remember to visit the FX Pesa page to get a link to register for an account. Remember, we use the Equity Trader app for trading. So you can download it on your Play Store or your Apple App Store. So just typing the name in the comment section right now, you should find that. And other than that, goodbye everyone. I hope to see you on the next session. So remember, for those who are new, that the Market Snapshot series continues every day, Monday to Friday. We have different presenters offering different perspectives, hoping that everyone will trade from an informed perspective. Goodbye and thank you, everyone.